For my journal, I'm going to look back at Friday's crude price action, which was pretty textbook perfect for the composite volume profile chart. I've got a 30-minute chart up, and I'm showing how price ranged in this air pocket up and down, and then breaking the range, going to the top of the previous air pocket before pulling back to that range, and where it settled at the close. This area will be filled in after a retest of the 45.75 on Sunday night, Monday. And the $24 a million question is it price going to break above 47.35 or below 44.85? And that's the direction that the trade should be taken. There's nothing but air below 44, so price would fall very hard and very fast. If price goes up, there's plenty of profile to work with, filling in up to the $50 range and potentially up to this ledge at 51. 51.50 and 52, say. I think that's the most likely direction given the dollar situation, with the dollar falling. That's not to say we're not going to get a retest of this middle area, and it might not get kind of scary down here as it's chopping. So I'm going to be watching the momentum of the SMI to see if it's breaking zero on my 30-minute chart. I have another indicator I use to give me the direction of the momentum, and using the slope of the EMA 20 to guide the direction of the momentum, and try to stay on this side of the trade. If the slope is up, then I want my trades to be on momentum up inflections above zero. And I can look at these on the smaller tick charts as far as the exact precise price action. So I can trade patterns, flags, and see the support resistance areas, and use the smaller inflections to guide me in trading. And using the initial balance and volume profile to guide me whether I'm overbought, oversold. I'm looking for these reversal areas to get in. I'm taught myself to wait for price to break above the EMA 20 on a reversal and make sure that I'm coming from an overbought area and coming up through the 40 on the SMI2 or the MOM2, whichever. I think it's a reversioned of the SMI2. But I can tell where we are crossing above the signal line with this MOM2 indicator, which I like. And that helps me stay with the trade, especially if my higher time frame momentum is going in this direction. I want to absolutely trade that direction, taking these lower momentum inflections. And I like the 512 tick chart because it helps me see the structure a little bit better. I can kind of get lost on the Rinkos. I do like a Keltner channel on a Rinko bar. That's very helpful too. Timing the trades and taking the inflections with the higher time frame inflections. This little Rinko size I put together for my 8-tick trading system, which helps me nail some of these 8-tick trades with higher position size. And this is the last of the chain of that evolution of going from the 30-minute to the 510 one Renko to the 512 tick chart. I execute these on that smaller time frame, but this 510 one Renko brick size is just perfect, and really helps me nail the ranges. And working with the just staying in a trade a little bit longer than I have been, instead of chopping myself out of a trade, I can get the initial inflection correct, but if there's a little bit of a triangle pattern consolidation, mini consolidation, I usually exit and try to re-enter once or twice before getting it right. So sometimes I'm down a little bit before I get the trade right. So if I exercise patience by waiting for the slope to change first before getting in, has really improved my profit and loss. But really trading a range from a range to a range, there's really not much you can do with the slope except for wait for the consolidation to end before knowing that's the time to take the trade to the bottom end of the range. And it's usually a short scalp, but I'm nailing those 8-tick moves really well. So this is it with the trading system for the SMI2 indicator, or the MOM2. I like the 5-10 ones really a lot during the day. This is the 15-cent stop loss that most of the crude traders trade with. So the consolidation breakout areas here are really good. When it clears a zone, which is so easily predictable, it will break through and then come back to retest it and then sell off again. So these inflections on that first pullback are the ones to take and ride the SMI down. So that's what I'm learning to do.